should I invest in the Melbourne property market in 2025? Where's it at? What's it look like? As per CoreLogic at the 31st of October 2024, Melbourne decreased 0.2% for the month, and over the last year has decreased 1.9% for the year. Now, since COVID, Melbourne's only grown 9.9%. Not much has happened in that period of time. Melbourne listing levels, 13% above the 5-year average. Things are taking a bit to sell, and that's because we've got added supply. And Melbourne definitely becoming more affordable than some of those other metro locations, and that's a good sign, but the pressure just isn't quite there yet to be where we want it to be. Welcome back to another episode of the Tailored Property Wealth Podcast. My name is Casey Taylor. I'm the host of the podcast, and in today's episode, we're talking about the Melbourne property forecast for 2025. And that's kind of a question that we've been getting a little bit at the moment is, should I invest in the Melbourne property market in 2025? Where's it at? What's it look like? I've managed to build a multi-million-dollar property portfolio in just a few short years, and I want to inspire and motivate other Australians that if I can do it, so can you. The Tailored Property Wealth Podcast has been created to help educate, mentor, coach, and support you through everything relating to property investing to make sure you go out there and make a much better educated decision when investing in property. Please like, share, subscribe, and share this podcast with anyone who you think might see value in it. So I thought it'd be a good episode today to get into just some data on the Melbourne property market, just a couple of suburbs to kind of see what the demand looks like in those areas, and what we'll also just go through is some of the factors that have negatively influenced Melbourne, just with some economic challenges, tenancy reforms, and kind of land tax hikes. And those negative impacts, there's some put in place to try and help tenants, but the reality is it's actually negatively impacting tenants and renters. Now, getting into this today, it doesn't mean that we don't think there's opportunity to purchase in Melbourne in the near future, but right now it's still not quite where it needs to be really getting those areas primed for capital growth, which is what we focus on in our business. Those areas primed for growth, so you're getting that capital growth in the short to medium term quite rapidly, which allows you to jump into that next one sooner. So let's get into it today, just diving really deep into some of that data, and I love going through the data on the property market. It's always good. So cool, let's get into it. So as per CoreLogic at the 31st of October 2024, Melbourne decreased 0.2% for the month, and over the last year has decreased 1.9% for the year. Now, since COVID, Melbourne's only grown 9.9% at the end of October 2024, as per CoreLogic. So what we're talking 4 or 5 years. It's coming up to 5 years, isn't it? So not much has happened in that period of time. Then if we look at the top performing LGAs for Melbourne, it ranges from minus 0.6% to 1.7%. So virtually zero growth for the top performing LGAs. And if you compare that to some other states, the top performing LGAs are doing 15 to 20% roughly. So it's just a bit of comparison at the moment. We really want to see that number growing for sure in those top performers, right? Some areas are going backwards pretty substantially. Melbourne listing levels. Now, they're 13% above the 5-year average. So that's kind of where a little bit of that, which we'll get to in a moment, is the days on market. Things are taking a bit to sell, and that's because we've got added supply. And we've got to remember that we're looking for areas that are high in demand with low supply. And if you compare those listing levels of 13% above the 5-year average to Brisbane and to Adelaide and Perth, Perth has jumped up a little bit, but still below the 5-year averages, and they're 20% below the 5-year averages. So pretty big difference in terms of those listing levels and that supply. So it's just something to note. Melbourne vacancy rates across the board of Melbourne as per SQM research for October 2024 is 1.7%. So don't get me wrong, that's still chronically undersupplied, right? But in comparison to some of those other cities, we've got Adelaide sitting at 0.6%, Brisbane sitting at about 1%. So it is just that little bit higher in terms of those vacancy rates. So it's just something to factor in. So holistically looking at that, right, we've got listing levels that are above the 5-year average, which is high supply level still, and we're still just not seeing that pressure to push those prices higher. And Melbourne, yes, it is definitely becoming more affordable than some of those other metro locations, and that's a good sign for that room for growth that we always look at in that borrowing capacity ceiling. But the pressure just isn't quite there yet to be where we want it to be. So what we'll do now is we'll just go through just a couple of suburbs, and I've tried to just bounce it around Melbourne a little bit so you can kind of see the different areas and what the days on market is doing and just the median value. So Geelong, obviously further out. However, days on market has increased from 26 days in 2023 to 52 days in 2024. So it's virtually taking twice as long to sell properties on average in that area. Median days on market's a really good one to look at, because if the pressure's there, if the demand is there, supply levels are low, we will see that days on market over a 12-month period actually drop. A lot of areas we're targeting right now have, because they're at such low levels 12 months ago, median days on market's roughly around 10 12 months ago and 10 now, or can even be a little bit under 10. So it's taking a hell of a lot longer for property to sell. And as a purchaser, don't get me wrong, that's great because you have more room to take action, make those decisions. But we just want to get it closer to where it's ready just to start pumping that growth. Thank you for listening to this episode of the Tailored Property Wealth Podcast. I hope you're learning lots and getting lots of value out of this episode. If you want to discuss the opportunity of working with us here at Tailored Property Wealth, jump across to the website www.tailoredpropertywealth.com.au, complete the contact form, let us know that you're listening to the Tailored Property Wealth Podcast, and let's reach out, let's have a chat and see how we can help you execute on your property goals. Okay, Footscray days on market has increased from 42 days in 2023 to 58 days in 2024. So again, it hasn't doubled, but again, it's jumped up significantly. So again, we've got higher supply levels than demand, and that's why it's taking longer to sell. Braybrook days on market has increased from 52 days in 2021 to 81 days in 2024. So it's a massive jump in terms of the days, and taking virtually 3 months on average to sell, which is it's a long time. So that's something that we're always tracking, always keeping an eye on, because it's a good metric to understand and look at, as those days on market. Now, if we just run back through the median value of Geelong, Footscray, Braybrook, so median value has dropped 4.64% over the last 12 months in Geelong. All right, so remembering 26 days on market, 2023 increased to 52 days now, and it's virtually dropped 5%. Not a massive drop. It's all part of the cycle, right? Ebbs and flows, but when we're wanting to invest and get those areas primed for growth, not stacking up. All right, Footscray, it has dropped 3.85% over the last 12 months. And remembering 42 days on market, 2023 has increased now to 58 days. Look, it's very similar numbers, not massive corrections or anything like that. It's nothing super scary. But like I said, when we're looking for those areas primed for growth, not where it needs to be, I should say. Braybrook, so it's dropped 3.62% over the last 12 months. Remembering 52 days on market, 2023 has now increased to 81 days in 2024. So it's just highlighting that pressure is just not there as yet for where we want it to be to really start moving those prices. Don't get me wrong, you can purchase in those areas now and kind of sit on it, but you might lose a little bit first before we're then moving back and getting into that growth. So if we can get it closer to where it's not a massive amount of people competing yet, but we're starting to get that movement in terms of price growth, that's where we want to be, and it's just not there yet. 6 to 12 months' time, it might be, but right now, it's not. So let's touch on some of the negative factors that have influenced and affected the Melbourne property market. Obviously, during COVID, Melbourne was a pretty crazy place to be in terms of those lockdowns. And those lockdowns have really affected businesses. And I guess you got to think about it from that local economic point of view. If business is affected, there's a lot of people that aren't making the money. It's not bringing the money into that marketplace. And remember, it's based on incomes, on who can borrow money and who can push prices higher. So according to the ABS, there was a net reduction of 7,606 businesses in Victoria for the 2022-2023 financial year. So 7,606 businesses, which is a massive, massive amount. There was also an increased tax burden on businesses for the 2021-22 state budget as part of a mental health and wellbeing levy. So again, we've got businesses shutting down, we've got tax increasing on businesses, so it's no wonder that there's less businesses, etc. So that's the economic challenges. We then had some tenancy reform changes. So ultimately, the reforms benefit tenants just with different bits and pieces. I won't really go into depth on those different things. However, this is this backwards thinking approach that the government has, that a lot of Australians have. We need to demonise landlords, which is just ridiculous. It makes zero sense when we have public housing so low in this country and we rely heavily on private landlords to go out there, purchase stock to provide a solution to the rental crisis. If you've listened to episodes in the past, we've obviously banged on about it, but it's just crazy that we're trying to negatively influence landlords, because then what happens is less landlords are coming to the marketplace, buying rental properties, and then there's less stock for tenants to choose. Okay, so that's affecting the pressure, right? Because there's less investors in a marketplace. Owner-occupied, we really want in that marketplace, but there's always going to be a portion of investors that are helping with that demand and pushing prices. So tenancy reforms, ironically, are making it worse for tenants, but on the flip side, that pressure's definitely influenced the marketplace. Victorian government also have introduced land tax hikes. So not only is it more challenging for landlords because tenants have far more rights, but they're now getting land tax. So there's just multiple reasons why they're not going to purchase in that state as an investor, and that's negatively influencing the state. And ultimately, if land tax increases and we've got investors who have land tax increases, that is ultimately going to trickle down to the tenants, and they're going to pay for that in the rent. That's just the reality of it. It's plain and simple. Doesn't mean it's fair, but if there's more expenses that landlords are receiving, it's going to trickle down. So that is a little bit of the Melbourne property market forecast for 2025 and what we're kind of seeing now, but what we think is going to happen. It's just not where it needs to be at yet. We really want to see it with that pressure to push prices higher so we can get that capital growth. It's definitely a marketplace we're keeping an eye on as part of our research. However, it's just not quite there yet. And there's just a lot of other areas that are still performing really well, still got that affordability piece. And that's what the next episode next week's going to be. Will be on the Brisbane property market, what we kind of expect for 2025 with the Brisbane property market. So keep your eyes peeled for that one. Hope this one's been valuable if you're thinking of investing in the Melbourne property market, or you're thinking of where to kind of invest in 2025. The next couple of episodes are going to be pretty valuable just to set you up for 2025. If you're thinking of investing, if you've been thinking of reaching out to us, I would suggest doing so now, because at the moment we are pumping with client engagements, jumping on board, ready to go for 2025 before those interest rates start to decrease. A massive amount of the herd will flood back to the marketplace. So we do have a lot of clients wanting to get in before that happens. And it's a good time of year. We like this time of year from a purchasing perspective, because there's a lot of people that they start to switch off now, right? So it's just this good little buying opportunity where we can get in and just compete with less people. And then as of January, everyone's back in, and it's just a really good little opportunity to purchase. So anyway, we'll leave it at that. And Brisbane property market forecast next episode. So look forward to it. Thanks for listening and have a great week. Bye. Thank you for listening to this episode of the podcast. If you don't already, make sure you follow us across all of our social platforms. That can be Instagram, YouTube, LinkedIn, Facebook. I wish you all the best out there on your property investing journey, and I hope each decision you make in purchasing more property gets you closer to your goal of financial freedom.